Good morning, everybody. I'm here in Yonkers, New York. It's like 7:20 in the morning, but I'm going to make you a really good Hims video. Hims had one of, if not the best earnings that they had in quite a while. This is probably the best earnings that I heard over the course of the last year and a half or so of Hims, and this is definitely something that was needed. If you remember, I did a earnings preview for Hims the other day, and I mentioned a couple of things, and Hims literally did every single thing that I mentioned. They hit a triple beat, which I'll go over in just a moment, which means they beat in revenue, they beat in earnings per share, and they increased guidance. They were able to knock it out of the park with subscription growth, and besides for the subscription growth, which reached over 100,000, I'll go over it in just a moment. Very, very important, they were able to keep costs flat. So they increased subscribers and kept costs flat, which was very important. And one of the biggest criticisms from the Bear Report that is essentially what started to make Hims go down. Hims literally went from $3.50 to 12 and change, drove all the way down to right under $6, which I told you this would happen. It went to $5 and like 80 or something. Right now, Hims is trading at $6.30. And Hims is up around 5% pre-market. I saw it all the way up to 8% pre-market, and now it's cooling down to around 5% pre-market. I am a buyer of Hims because I think Hims is substantially a better company today than it was yesterday after this earnings call. Sorry I couldn't film it live, but I had to pick my kids up from school, and that's more important. But I do want to give you this preview. So I'm going to break this preview down into two parts. The first part is I'm going to just mention something about the business, how it's growing. The second part is going to be the actual financials. And if you're worried about this pinky right here, well, whoever knows, knows. All right. Key things. Hims and Hers. So people don't know, Hims is actually Hims and Hers company. Hims is for men and Hers is for women. And if you're in between, you can buy both products. Spend twice as much money. All good, no disrespect, spend more money with Hims. The growth of Hers nearly doubled. The subscriber count of Hers nearly doubled in quarter three. They didn't give us the actual numbers, but that's absolutely freaking bonkers. They said that the main driving force is hair care and dermatology and personalization. So they're really pushing this personalizational treatment for all customers, Hims, Hers. So doubled. That's absolutely freaking insane. And I didn't hear nothing about it, but last quarter they said that the UK business, remember they're only in two countries, US and UK, and UK they don't offer everything, was growing at triple digits. So like doubling. There's so much more that Hims can do in terms of growth. They're only in two countries. The order fulfillment, a lot of people complain that they use third-party pharmacies. Well, 80% of the orders fulfilled is by affiliate facilities now. So it's like in partnership with actual Hims. They're going to have it to around 100% by the end of the year going into next year. And third-party pharmacies are only going to be, fulfilling a very small number for redundancies. But the interesting thing is not that they have 80%, that they were supposed to have 80% by the end of the year and 100% into next year. They reached 80% a quarter early of affiliate facilities. So this is something that the Bears always take a shit on. This is something the Bears were saying that, we have no moat. The pharmacies can do it themselves. The pharmacies can put you out of business, so on and so forth. Well, now we have affiliate facilities. But the Bears are going to find something wrong to say about that. Weight management is coming by the end of the year. That's a brand new product line. And remember, we stack products. How do we stack products? Using artificial intelligence and machine learning, which I know everybody speaks about, but we were talking about this in Hims. Last quarter, they launched a beta of MedMatch. This quarter, full version's coming out. Well, what exactly is MedMatch? It uses artificial intelligence and machine learning of the 1.4 million plus subscribers of data using millions of data points, and it optimizes treatments using these millions of data points. Guys, this is a way to eliminate trial and error. Instead of going to the doctor to get different type of medications that might work, might not work, and then you add this, you reduce that, you cross this, so on and so forth. I'm sure we all dealt with this going to doctors throughout the years. MedMatch is going to give you a better medical match for your treatments. And the more they start offering, for example, weight management, cardio, mental health, weight loss, I said that twice. The more they're going to be able to eliminate trials and errors, and the more they're going to be able to personalize treatment for you. This is something that's also grown growth. That's also grown the growth for hers. That's why they're growing at double digits. It's all about personalization. And that's starting to be a mold forming of Hims that people are not understanding. Less dependency on third party, more dependency on technology and utilization of artificial intelligence, machine learning, but actually using AI and ML for your business. Now, I'm not a genius in AI and ML, but I'm a Palantir head, and I know a little bit about it. And I know that this shit works. This is also one of the success stories of SoFi, if you guys know, because they use artificial intelligence and machine learning. And when I was on Stock Tank talking about this to Tevis and Tanner, I mentioned this. It's very similar to what's happening to SoFi. They said that they are rapidly gaining market shares, and one of the reasons why they are rapidly gaining market share is because of the personalization and their investment in technology, which I'll go over the numbers in just a moment. And they announced a very, very, very big $50 million worth of buyback over the last 2 years, up to $50 million. They don't have to buy it back, but they could. And they said because our shares are extremely cheap in the market. So they're saying, hey, we're reinforcing that we believe that our company is worth it and the shares are super cheap. Now, if you guys are wondering, the approximate market cap is $1 billion. So that's approximately a 5% total float, plus or minus, of Hims. Now, I believe that Hims is going to be worth more than $1 billion next year. But that's just my own personal opinion. Of course, nothing is financial advice, purely entertainment and education. And I'm about to go over the numbers. Do your own research. Do your own due diligence. And I've been talking about Hims. One of the few people, not the only one of the few people that's talking about Hims. And it never gains traction. So under the radar. It still is. Hopefully, we're going to start gaining some traction. Erectile dysfunction and hair loss. Shout out to Hims. I use hair loss for my Hims for my hair loss. And it does work. They said erectile dysfunction and hair loss is number one in their business offerings, but they're going to be able to gain market share and increase revenue because of cardiovascular offerings, mental health offerings, and weight loss offerings, as well as expansion in global markets. Let's talk about the financials because they are absolutely absurdly good. Now, last quarter, Hims grew 83%. But you got to understand, Hims has been growing literally for the last year and a half. I believe for the last 5 quarters, they keep raising guidance, including this quarter. And they raise guidance, smash it in earnings, and keep raising it when they smash it in that earnings. So just keep that in mind. There's a law of big numbers. The higher you start making, the percentages start diminishing. Although we're not doing 83%, and last year we grew 97%, we did grow 57%, and it was a beat. We were expecting $220 million on the high end of estimates, right? There's a low and a high. We ended up coming in $226.7 million. If you guys don't know, 57% is obscenely good. It's absurdly good. That is considered hyper freaking growth. Anything above 30, 40% is considered hyper growth. Not super growth, not amazing growth, hyper growth. We are definitely a hyper growth company. For now, what happens later, I don't know. For now, we are a hyper-growth company. You know what else is hyper-growing? Our subscriber count. Last quarter, our subscriber count only grew 91,000, and it was not good. All right? We grew less than 100,000. We need 100,000 subscribers, and a lot of people were complaining. Well, we were able to grow over 125,000 subscribers, nearly 126,000 subscribers, to a total of 1.426 million. Last quarter was 1.3 million. This is a great number. This is one of the things that I was talking about, right? Triple beat, an increased subscriber count, and decrease or keep flat marketing, which I'll get into in just a moment. Slightly the average spend per client, per customer, went up to $54, which is good. Hims does not rely on a customer spending more money on average. Hims relies on gaining more subscribers. When a subscriber count increases and the subscriber spend increases, this is like a double whammy. This is, you have your cake, you eat it too. This is the cherry on top. So really good. Shout out to them. Gross margins increased to 83%. It increased to 83%. Last 2 quarters, it was 82%. They guide for, I believe, 75%. And they end up smashing it. And the reason why they're smashing it is the efficiency for product costs and efficiency for shipping costs. So they're able to get more efficient. How do they get more efficient? Well, that's that affiliate program instead of using third party, all right? And of course, other things. I'm just giving you guys an example that you can wrap your minds around. Really, really good. And all this extra gross margins that they have, they put back into the company. Marketing costs, super important. Marketing cost is flat at 53% and down year over year. So it's super, super flat, which is good. It's approximately the same amount that it was last quarter. And this is exactly what I was talking to you guys about. Operations is also flat. Now, the marketing costs, and I don't remember what it was off the top of my head, but marketing costs, you have a total amount of marketing, and then you divide the number of subscribers. And then that number that you get is the amount of money you spend to gain a subscriber. So if the marketing cost, let's say, for example, was $100,000, I'm just giving you guys a number. And let's say it's $1 million, I'm sorry. Let's say the marketing cost was $1 million last quarter, and it is $1 million this quarter, just to do easy math. Last quarter, we gained 91,000 subscribers, which means you take 1 million divided by 91,000 and you get a number. That number is going to be bigger than this quarter, which you would take $1 million and divide it by 1.26, right? 126,000. That number would be smaller, which means we are spending less money on marketing per subscriber gained. And in total, and I put out a tweet, check me out on X, Finance 411 on Twitter. I put out a tweet yesterday with the actual numbers of this, with the total expenses. And we're not spending more money to gain a subscriber, and we're gaining more subscribers. It's really beautiful. Operations cost is flat at 13%. Technology is flat at 5%. Technology is the reinvestment in MedMatch, artificial intelligence, machine learning. And they said that they will keep reinvesting this technology and keep spending more money on technology, which I believe is what they need to do to keep smashing other companies like Keeps and companies like that. Very important, guys. We're not competing with Teladoc. It's a totally different company, right? Every time I compare them, I say that we're not the same company. I just use it for metrics because it's hard to find a company that is like Hims because they're so one of a kind. Finally, adjusted EBITDA came in at 12.3 million, which is on the higher end. EBITDA is a precursor for GAAP profitability, which I'll talk about in just a moment. EBITDA stands for earnings before amortization, taxation, and depreciation, something like this. And GAAP profitability is generally accepted accounting principles, which means that actual money. And EBITDA is actual money coming to the business before fancy accounting. Very simple. EBITDA, money coming in before fancy accounting. GAAP profitability, money coming in after fancy accounting. Okay? They have 212 million cash and cash equivalents, and that's how they can give up 50 million for buybacks. Now that cash and cash equivalent keeps going up, and is going to keep going up well into next year. Finally, they raised Q4 guidance and full year guidance. Q4 guidance now is 243 to 248 million. This is going to be an increase of 45 to 48%, which is still hyper growth territory. EBITDA is going to increase to 14 to 17 million, which is why we're getting closer to GAAP profitability, which I'll explain to you in just a moment. And full year guidance is now raised to 868 million to 873 million, which is an increase of 65 to 68% year over year. Last year, it was like 97%. 65 to 68 is ridiculously good year over year. And EBITDA is going to be raised to 43 to 46 million. This is absolutely freaking massive. Every single quarter, they keep increasing their guidance. And the most interesting thing is they said that GAAP profitability, first half of 2024, possibly even quarter four, next quarter, we're going to start seeing that. And then they're going to have a really beautiful growth story where the stock should take up. I gave you all the numbers. I love this quarter. I didn't find anything wrong. I still got to review the whole presentation. I'm literally waiting for my inspector to come. I was listening to the first half of the presentation. I did go through some of the slides, the official news statement. I didn't listen to the Q&A. And Andrew Dudum came out. He was clear, concise. He did a good job. And I give criticism where criticism is due. Also, he came out with a MedMatch video. It's on their YouTube. I'll probably review that in a different video. But all in all, HIMS is a buy for me. And I will be adding to my position. And this is exactly what I was looking for. Now, I would never hope for a stock to go down after earnings. I would never bet against my stock. Like, I don't sit here pray for a stock to go down. But what I will say is, if HIMS does not take off after this, massive buy. That's for me. You guys do your own due diligence. But they smashed earnings in every single which way possible. And this should silence any of the bears, because there was a lot of bear thesis after last quarter, since the subscribers was only 91,000 and our marketing went up, that we have to spend more money to get less subscribers. Well, now we're spending the same exact money, but we increased subscriber count by 30%, right? 91,000 to 126,000. 30% roughly. There is no question now that HIMS is becoming more efficient, gaining market share, and not only doing what they said they're going to do, they increasing what they said they're going to do. And they're going to keep gaining market share. And the team seems extremely confident. Now, a lot of people think that AI and machine learning is a fad. It's bullshit. It's just hype words. And many companies are full of shit. And I say this when I cover Palantir. You guys know this. But some companies actually utilize artificial intelligence and machine learning to make their companies better, to increase revenue, to increase growth, to increase efficiency, to decrease inefficiencies. It's not the same. And I believe that HIMS is doing that right now. I believe companies like SoFi is doing that. Of course, Palantir, which gives the ability to companies to do that. Guys, thank you so much. In the comments, let me know down below. Are you buying? Are you selling? Were you happy? Did you not like this earnings? And what did you love or hate the most from the earnings? While you're there, give me a like. And if you want, subscribe and share. Thank you very much. I'll see you guys in the next one. I'm going to see if my inspector is coming soon. Take care.